Deep Dive, SiriusXM, $SRI, Stock, Performance, Sentiment, Media Narratives, Apple Acquisition Rumors, Jim Cramer Commentary, Liberty Media Restructuring, and upcoming Q3 2025 earnings. Executive Summary. Over the past 5 years, SiriusXM, $SRI, has faced volatile financial performance, fluctuating investor sentiment, and persistent speculative rumors, particularly around the prospect of an Apple acquisition. Recent structural shifts, notably the 2024 separation from Liberty Media, have catalyzed a new phase as an independent public company. This report provides an in-depth exploration of key themes: historical stock performance from 2020 to 2025, patterns in investor sentiment, and changing media narratives, a detailed timeline of the recurring Apple acquisition rumors, a chronological analysis of Jim Cramer's public commentary, a comprehensive breakdown of the Liberty Media restructuring and its impacts, and a focused preview of the upcoming Q3 2025 earnings report, including analyst expectations and relevant market signals. Historical performance of SiriusXM, SIRI, stock, 2020 to 2025. 2020, initial pandemic disruption and modest recovery. The 2020 period was marked by COVID-19 disruptions, with SiriusXM's share price declining amidst uncertainty in the automotive sector, which is pivotal for SiriusXM's subscriber funnel. SiriusXM's stock declined nearly 10% that year, underperforming major indices, mainly due to interruptions in new car sales and dealership activity, which directly impacted trial activations and self-pay conversion rates. From a financial perspective, 2020 saw revenues of $8.04 billion, with net income heavily pressured by $976 million non-cash impairment charge tied to Pandora. The company nonetheless managed to grow its self-pay subscriber base and maintained a low churn rate of around 1.7%. 2021, recovery, record revenues, and early rumor resurgence. By 2021, SiriusXM's operating environment improved, with revenues reaching a record $8.70 billion, an 8% increase. Net income rebounded to $1.31 billion. Adjusted EBITDA hit $2.77 billion. Key highlights included 1.15 million net new self-pay subscribers and continued improvement in churn metrics. Despite the positive operational performance, SIRI stock only realized a 4% gain over the year, lagging the S&P 500. The market narrative frequently referenced competitive threats, Spotify, Apple Music, etc., and contained periodic flurries of speculation, especially regarding Apple's potential interest in acquiring SiriusXM as it enhanced its automotive and audio ecosystem. 2022, stagnation, pressure builds, and investor concerns. The momentum of 2021 did not persist. SiriusXM's growth leveled off in 2022, with total annual performance down roughly 3.4%, attributable to intensified streaming competition and slower growth in new vehicle sales. The company's revenue growth slowed, with the ARPU pressured by higher discounting, and net income remained roughly flat year over year. Investor sentiment turned more cautious as media narratives began to focus on revenue slowdowns and subscriber challenges, fueled both by external competition and the beginning of a broader market rotation out of legacy media and broadcast firms. Periodic Apple acquisition rumors persisted, almost always synchronizing with earnings seasons. 2023, mixed results, increased churn, and Liberty Media transaction rumors. 2023 saw SIRI stock retreat by around 3.5%. Financial performance remained subdued, revenue stagnated, the subscriber base shrank slightly, and margins compressed, driven by continued competitive pressure and ARPU erosion. A crucial narrative of 2023 was Liberty Media's proposal to take full/complete ownership of SiriusXM, which would eventually culminate in the 2024 restructuring. Simultaneously, Apple M&A rumors, which had been idling in prior years, surged in visibility during Q1 and Q3 earnings cycles, often propelled by broader M&A speculation in the tech media ecosystem and bolstered by renewed interest from retail traders and selected institutional buys, most notably Warren Buffett's incremental position through Berkshire Hathaway. 2024, Liberty Media separation, reverse split, and onset of a new era. The signature event of 2024 was SiriusXM's split off from Liberty Media. The transaction, completed in September, reduced the number of outstanding shares via a 1-4-10 reverse split, dropping shares from over 3 billion to approximately 339 million, and returned the company to full independence, with former Liberty SiriusXM shareholders owning approximately 81% of the new entity and legacy SiriusXM shareholders the remaining 19%. The share price adjusted commensurately, rising from the pre-split $2.06 range into the $18.28 post-split range, with a cumulative market cap that remained broadly stable, but with reduced retail liquidity and higher institutional visibility. Financially, 2024 marked the first year of a revenue decline, around -1.8%, mainly due to subscriber losses and a challenging ad environment. Net income remained positive, but operational pressure was evident in new subscriber acquisition costs and persistent ARPU declines. The stock fell a dramatic 57% for the year, largely reflecting the collapse of the pre-merger premium and subsequent normalization post-transaction. 2025, weak recovery, earnings pressure, and cautious optimism. As of late October 2025, SiriusXM stock hovers in the $21.24 range, post-split, with volatility frequently spiking in proximity to major rumors and earnings reports. YTD, the stock is up marginally, but remains nearly 15% below year-ago levels, and over 53% below pre-restructuring peaks. Investors remain deeply divided. The bull case centers on SiriusXM's prodigious cash flows, dividend stability, annualized yield around 5%, and potential for further corporate action, buybacks, further M&A. The bear case zeroes in on secular subscriber erosion, declining ARPU, and the risk of being outmaneuvered in a streaming-centric audio landscape. Investor sentiment and media narratives, quantitative measures, and sentiment trends. Recent data shows a marked decline in positive sentiment for SiriusXM among both institutional and retail investors. Over the last year, the total shareholder return is down over 12%, with both media coverage and online searches weakening substantially over recent months. A roughly 17 to 20% drop in media, social media, and page view metrics since mid-2025. Institutional sentiment has been cautious. While Berkshire Hathaway's continued purchases, totaling over 9 million shares valued at nearly $44 million in early 2025, bolstered some speculation around SIRI's hidden value, hedge funds have in the aggregate moderated their positions, with increased short interest ahead of earnings cycles reflecting skepticism about near-term subscriber and revenue trends. Shifts in media narrative. The dominant media narrative has oscillated between viewing SiriusXM as an undervalued, cash-generating moat business and seeing it as a legacy operator fighting an inexorable decline. Analyst and media coverage regularly reference SiriusXM's high new vehicle penetration, now over 80%, and its unique distribution in the auto channel. However, coverage is increasingly focused on core risks, rising customer acquisition costs, difficulty acquiring/retaining younger listeners, and relentless pressure from streaming competitors, Spotify, Apple, and YouTube in particular. The Liberty Media restructuring prompted a temporary surge in positive coverage, with outlets framing the move as eliminating the tracking stock discount and unlocking potential for index inclusion and institutional buying. However, disappointment about the lack of an immediate premium and skepticism about long-term prospects has since reemerged. Patterns around rumor cycles. A peculiarity of the SIRI media narrative has been the persistence of Apple acquisition rumors. Almost without fail, rumors proliferate in the lead-up to or immediately after quarterly earnings, as discussed further in the next section. This has made SIRI a focal point for trading speculation, as evidenced by options volume and social media chatter spikes during those periods. Timeline. Speculative Apple acquisition rumors, 2021 to 2025. Apple SiriusXM rumors are a perennial fixture of the SIRI media and investor landscape. They tend to follow a regular, predictable cycle, peaking in the run-up or aftermath of quarterly earnings, especially Q1 and Q3. Apple SiriusXM Rumor Cycle Table. Analysis and context for each cycle. In Q1 2021, Apple's earnings smash records amidst the first meaningful momentum for the so-called Apple Car. This reignites blog, financial press, and message board speculation that Apple could accelerate a vehicle entertainment strategy by acquiring SiriusXM's substantial in-auto footprint, a narrative that plays out most frequently on auto forums and stock-watching corners of the internet, but also gets picked up in traditional business media. The rumors die down as Apple reveals no substantive deals. Instead, it expands CarPlay and focuses on services growth. In Q1 2022, Apple intensifies its push into automotive integration, CarPlay enhancements, while Siri continues deepening partnerships with Apple Music and others, including 12-month Apple Music subscriptions for high-tier Siri customers. Again, speculation that these moves could be precursors to a full acquisition cycle through forums and select news sites. Market reaction is muted. No further progress is observed. By Q1 2023, the revelation that Berkshire Hathaway has built a significant position in Siri triggers renewed speculation, not just about Apple as a theoretical buyer, but about coordination between Berkshire and Apple, Berkshire being both Apple's largest shareholder and now a major Siri holder. These rumors, amplified on Reddit and in market blogs, drive a one-day 16% surge in Siri's price, but dissipate as neither Apple nor Siri confirm any dialogue. Q1 2024 brings a new twist. The forthcoming Liberty/SiriusXM split-off prompts talk that Apple may swoop in post-transaction, taking advantage of the restructuring. This cycle is fed by simultaneous reports about Apple's aggressiveness in AI M&A, but ultimately culminates in no new deal with SiriusXM. Media focus pivots decisively to the Liberty Media transaction instead. Q3 2025 sees the highest profile iteration of the rumor, with pressure building on Apple to catch up in the AI race and Wall Street titans, notably Wedbush's Dan Ives, calling for a Perplexity or Siri acquisition. Both traditional and social media briefly entertain the thesis that as Apple pursues AI and automotive dominance, Siri might once more be in its crosshairs. Once again, these expectations are unfulfilled and attention moves to Apple's high-profile talks with AI startups for Siri, not satellite radio. What is clear from each cycle is that while SiriusXM's unique automotive distribution and subscription base makes it an intriguing strategic asset, the structural, cultural, and regulatory realities of such a mega deal have consistently rendered these rumors little more than a lever for short-term trading volatility. Jim Cramer Commentary Timeline, 2020 to 2025. Early 2020s. Fluctuating optimism, wait-and-see stance. Jim Cramer, prominent financial commentator and host of CNBC's Mad Money, has been remarkably consistent in his skepticism towards SiriusXM throughout the past 5 years. While there have been brief moments of neutrality, especially during periods of bullish sentiment following earnings beats or major partnership announcements, Cramer's overarching message has shifted from underwhelmed to increasingly bearish. In the early 2020s, Cramer often categorized Siri as a wait-and-see stock. He acknowledged the company's monopoly-like position in satellite radio, generous cash flow, and exposure to the automotive cycle, but regularly cautioned viewers about the mounting threat of streaming giants and the aging of SiriusXM's core audience. His critiques touched on the legacy nature of the business, subscriber stagnation, and lack of organic digital user growth. 2023. Early 2024. Open skepticism and disengagement. As SiriusXM's performance stagnated and competition intensified, Cramer's commentary turned more dismissive. He urged investors to steer clear of Siri, frequently referencing secular subscriber decline and the risks of automotive market softness. The rumors of Liberty Media's consolidation and Apple's supposed interest did little to shift his outlook. On several occasions, Cramer fielded calls from viewers asking if Siri was a value play and responded by emphasizing his preference for more dynamic names in the entertainment and tech spaces. 2024 to 2025. Explicitly negative, stay away message. In the run-up and aftermath of the Liberty Media split-off, Cramer became bluntly critical. Appearing on CNBC in March 2025 and again that summer, he repeatedly stated, "We're going to stay away from Sirius." He underscored the ongoing struggles in the auto sector, related to autos, and autos aren't selling well right now, and characterized SIRI as not a serious stock at this point. He dismissed rumors of acquisition or renewed growth as speculation traders should ignore, suggesting that while Warren Buffett's position might be a value signal, the risks to growth, relevance, and competitive position were simply too steep for most investors to stomach. Overall, Cramer's stance on SiriusXM has become a consistently negative bellwether for media sentiment, amplifying the view that SIRI is a fading legacy asset better avoided except by deep value contrarians.